Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. So, checking in on what went on overnight. Global equity markets turning positive. Cooler than expected US inflation data buoyed investors on Wall Street. Although an escalating trade tensions pushed bond yields higher. A slowdown in consumer prices opened the door to more rate cuts, which helped staunch a sharp sell-off among the growth stocks. Shares in Nvidia rallied, helping stem steep losses over the past month, and Tesla extended its recovery, having now raised around half of its recent losses. Intel shares jumped after the bell after it appointed Mugunthan as its chief executive, while it was earlier boosted on a report that TSMC had pitched for Nvidia, Advanced Micro Devices and Broadcom about taking a stake in a joint venture to operate the US chip company's factories. Shares of uranium-linked stocks rose after tech majors Amazon, Alphabet and shale firm Occidental signed a pledge to boost nuclear energy capacity. Nuclear utilities Constellation, Vernova, Vistra and Talon all rose as a result. And PepsiCo fell after broker Jefferies downgraded its rating on the stock to hold from buy. Well, President Trump has threatened to escalate a global trade war with further tariffs on goods from the EU as America's major trading partners announced retaliatory measures. A 25% duty on all US steel and aluminium imports has taken effect, and Canada, the biggest foreign supplier of steel and aluminium to the United States, has countered with 25% tariffs on those metals, along with computers, sports equipment and other products worth around $20 billion. And the EU has announced $28 billion worth of tariffs on US exports to take effect next month. Meanwhile, US consumer inflation expectations have jumped higher as a result of the trade war, yet the latest read on US consumer prices increased less than expected, with inflation rising at 0.2% last month after accelerating 0.5% in January. In the 12 months through to February, the CPI increased 2.8%, while ex-food and energy it came in at 3.1% year on year. The US 2-year Treasury yield has risen to 4%, while the 10 years trading up to 4.33%, and markets pricing in no chance that the Fed will cut rates at next week's meeting, but a 90% chance of a cut by June. And the US dollar edged higher against the majors, including the yen and the euro, but went the opposite direction with the Aussie. The Aussie is sitting at 63.2 US cents, and Bitcoin is trading at around 83,500 US dollars. Checking in on commodity prices, they're mostly high. Oil prices rising on tighter than expected US oil and fuel inventories. Brent futures up 2% at almost $71 a barrel. Copper up 1.7%, iron ore marginally higher at $102 US dollars a tonne, and gold rising more than 0.5% to $2,932 an ounce on that tariff uncertainty and core inflation report, which enhanced the prospects of further rate cuts. Well, let's take a broader look with a focus on India, and Mugunthan Siva is joining us from India Avenue Investment Management. Mugunthan, good to see you.
Likewise.
Can we first start with the issue of tariffs? Has India copped any of this yet?
Modi went to the US. They had a conversation, and I think the general case from Trump is that we will have reciprocal tariffs rather than instigate anything further. So I think India's stance very much in the last 10 years has been to play neutral territory. So I would imagine that, yes, there is going to be some impact. The amount of trade between US and India is around the 70 billion mark. So I wouldn't say it's insignificant, but certainly India is one of the smaller or younger trading partners for the US.
Yeah, what's the majority of what it's trading? What's it exporting?
So India's largest exports are refined petroleum. So they import oil, they refine it as a process of a significant refinery in the west coast of India, and essentially that refined petroleum then goes out. Also jewellery, textiles, those are areas. Services is different because that's where IT services comes in. Increasingly, as we've talked on the show before, pharmaceuticals is now around 5% of export to the US, and it's actually provides for 40% of US generic usage.
Yeah, it's interesting. Donald Trump doesn't appear to account for services in his equations. It's all about manufactured goods. Interesting, though, you say oil, because that's exactly what he's targeting, isn't it? That he wants to see lower oil prices by increasing supply in the States. So potentially could see some more detail there and effect on Indian oil exports.
Correct, yeah. And I think India has also diversified its import base for oil quite substantially. So there's relationships, obviously everyone knows and has talked about Russia, but also significantly in the Middle East. So I think diversity is the key to trade relationships going forward.
Now, of course, we have seen a global sell-off stemming from what we're hearing from Donald Trump and the implications of a global trade war. We've also seen a sell-off in India, but that actually began a number of months ago. Why was that?
So yeah, it almost goes back to late September when China started its stimulus package. You could almost correlate it day to day. Then there was a period of US exceptionalism leading up to the elections and post the elections. However, India was overvalued at that stage due to the significant inflow from local investors that had happened. And earnings were running at 20% per annum, pretty much from 2020 up to 24 in the catch-up post-COVID. And they've now started to go into a downgrade cycle to recalibrate earnings to possibly 10 to 12%. So in that recalibration, market valuations have peeled off from about 22 times 1 year forward, which was aggressive, to now looking at 18 or slightly sub 18.
What are your feelings, what you're seeing in India, and I guess the influence globally of where the market's likely to go from here?
I think we'll see continued downgrades for the next 6 months at least. And then once, typically equity markets respond mainly to downgrades rather than purely a valuation number. So once the downgrade cycle is complete, we'll see equity markets, in my view anyway, bottom out towards the second half of this year.
Now, Mugunthan, you've just completed your annual grassroots tour to India. What did you find? What was your takeout?
Yeah, so typically we take potential investors from Australia and New Zealand. This was our largest tour by far. So one of the key insights for us is interest in India as a region to invest in as a standalone is increasing for Australian and New Zealand investors. But also when we went to India, we found that generally the mood was upbeat and positive at the company levels. Company corporate balance sheets are pretty pristine. Debt levels are at the lowest they've been in the last 25 years or so. However, there was a view that we're in the middle of a cyclical weakness whilst we still have the structural, tailwinds from the demographics. A lot of companies felt perhaps if they'd grown aggressively in the last 10 years, now they would still grow at a decent pace, but perhaps not at that same pace, because some of the areas like financialization has gone from under-penetrated to at least much more penetrated than they were. So new industries will evolve and develop, whereas perhaps those industries that have thrived may now take a little bit of a time correction.
When you talk about new industries, what type?
So, if you look at something like e-commerce or, food delivery, that is rampant at the moment. We discovered, for example, that the Uber Eats equivalent in India, there's a company called Swiggy, which listed last year. They're doing home deliveries in less than 10 minutes and charging something like 10 cents for a delivery. So that economics can only work in a country like India, given there are many people available to work at that price.
So, Mugunthan, you're looking to give Australian investors access to India investment via an ETF that you're launching. What's in it?
Yeah, so the ETF is a replica of our India Avenue Equity Fund. It's essentially listed so that it gives many people a platform to invest without having to be on an investment platform or fill out a form. And essentially the same thematics which are in our fund. We're overweight in pharmaceuticals and information technology. The story there is they will continue to win more share globally, and we feel those industries are the growth engines of this decade.
And will those industries, those emerging industries you've spoken of, are you looking to include those in future?
Yes, I think so. One of the issues with new industries and a lot of the IPOs coming out at the moment is they are coming out because valuations are high. We're finding 6 months later prices have usually come off to some degree from valuation prices. And you also need to find out in these new industries who the winner is going to be, because competition levels are rising, and there's, in any new addressable market, there's always a few winners, not everyone. So we're cautious about partnering with what we think are going to be the market leaders rather than just, being part of the thematic.
We look forward to the launch of India Avenue's active ETF. Mugunthan, thanks for joining us from India Avenue.
Thanks, Andrew.
So let's return to the local market. So we're just about to get underway for Thursday's opening session. You can see, looking for a positive start. Bit of a turnaround, if you can believe it. SPI futures up almost 0.25%. So stay with us. We're going to get right across that in just a couple of minutes' time.